Hey everybody, how are you? This is Jeff with WarriorTrading.com. I'm going to work on my nightly watch list here. I have a few good looking names for tomorrow I want to go over. I'll answer any questions you guys have, and then I'm going to go take my tri-tip off the barbecue. So, this has been pull up the S&P here. An interesting past week or so. The market has been rallying off the lows here. It is now and currently still testing this 205 resistance area. We're in this kind of a flag pattern right now, and we have not broken out to the upside. We are in slightly overbought conditions here. We could probably see a pullback to the 200 area. Would be good for things, and then we could leg higher, but we'll see what happens here. Very light volume day to start the week off. And however, we did get a couple of good setups for the swing trade watch list for tomorrow. So definitely excited about some of the names on there. And we also have a couple earnings plays as well that we'll talk about here with our use of iron condors and whatnot shortly. The first name I want to look at today is CSII. Now this has been on the watch list for many, probably the third time in the past month or so, as this thing has been trying to break over break into the gap here and start to fill it back toward this, where's that, 1185 area or so, 1180 area. So we have this alert today after this thing moved up, and again it's pinching the moving averages here. We're seeing this little squeeze of the 20 and the 50 here. So you can kind of see we have this, oops, we got a 20. You can kind of see here where these purple and the white lines are coming together. This is, well, you can't even see those white lines, it's pointless. The purple and the white lines are the moving averages here. They're starting to pinch. What will happen is we'll see a move to the upside, a sharp move to the upside, or a sharp move to the downside, depending on market conditions and whether or not there's buyers and sellers competing for control here. Now I'll show you a chart after this of the stock that's also on watch tomorrow that had this exact same setup and is breaking out to the upside. We're looking for the kind of continuation of this move up off the low here. Tested the 50 moving average today, right? Came right up to the top of it there. So we're really looking for a long over the 50. It hasn't been over the 50 this whole time since we had this big gap up day where it sold off. So we're looking for a move over the 50 here. We'll get long around 1040 or so. We'll look to add at the high here of the day that it gapped much higher at 1071. That'll put us in this no man's land between 1070 and 1180. And 1180 is ultimately going to be our longer term target here. So you can see this thing has been a pretty brutal sell-off here going back to last summer. It's never really been over the moving averages until just now. It looks like it's bottoming here, and we might see at least a short-term recovery. Just looking to ride this up here to 1180 or so in this with this nice bullish setup that we have, as long as we can get over and hold that 50 EMA. So this is going to be on long watch tomorrow over 1040, possible add spot over 1070. We'll look for a target of 1180 in this trade. Okay, VIPS is the next setup here. VIPS also a very similar setup. We have this move up from the bottom, this kind of flagging pattern. You can see again the moving averages, the 20 and the 50, are starting to come together. We're getting that pinch, and it's time for the stock to shit or get off the pot here. So we have this breakout here over the top of this descending resistance from this little tiny wedge looking thing, and we're looking for a long on this over the 13 area or so. That should get us to 1350, which is the high from back here in late February. We have this gap up here, and then once we get over the 1350 area, our next target will be 1460 or so. We'll see some resistance in through here, some chop, but we'll have a nice fat cushion on the trade over a point by then. This does have a 60-cent ATR. It is a very liquid mover. You can only move 60 cents a day on average, but it does trade with 13 million shares. So that tells us that we can take a little bit more size, and we can make a lot more money on these smaller moves without having to worry so much about it, without having to worry about liquidity issues and taking unnecessarily large losses. So it's a pretty clean chart here. This is what we want to see, looking for that candle over candle continuation here over the top of the highs. looking basically for an entry over 13, which is going to be this resistance for this entire period here, since other than the day that it gapped up and sold off. So that's where we'll look to have our first target here at 1350. You can also add at that if you're a little bit more bullish and longer term outlook. But remember, we're looking to capitalize on profit on these trades anywhere from 2 to 4 days. I don't really need to or like to hold them much longer. But this will be our short-term target: 1350, 1460, long entry over 13. Again, only a 60-cent ATR, so you can keep a tight stop at 1250 or so. And even tighter. We'll see what low of day is during the open range, but that'll be our target for tomorrow. For one of our other long setups is VIPS. Also LRCX. Okay, this one hit the daily daily reversal scanner. You can see it put in this 25% move up off the lows here over the past month. Came from $62 all the way up to a high of it's tapping $80 right now. $80 is a big whole number here. It is also a big critical area for some support back in here. It also acted as resistance, resistance and support this whole period here. If it breaks over, we have a pretty clear move back to $82 and then potentially 84. But because this is so extended to the upside here, we have this big move up, a nice long flagging period, and another big move up. What we're looking for now is similar to the last time this thing made its big leg up here. We're looking for this little pullback into the flag. We would like to see this potentially pull back. Once we start making new candle lows, candle under candle, we'll have a short-term trend reversal. We'll look for this to make a move back down to $76. Why $76? Because it's the previous area of resistance in the short term. In the recent history here, we can see that we tested 76 twice before failing at that area. Previous resistance will become future support. So as we break down under 78.80, 78.90, we'll look at $76 for our target, a little over 2.5 points. Again, another liquid name with about $1.46 ATR, so that's great. Definitely want to try and ride this one out as long as possible. I don't expect there to be a ton of chop on this trade. I expect this maybe will last for 2 days here. If we time this, or if this was timed well with the market, if we got to pull back in the market at the same time, this is a no-brainer setup here. It is trading with an RSI over 70, so it's definitely an overbought condition. So this is on short watch for an entry under today's low, which is 79.80. Excuse me, 78.95, and we'll look to ride this down towards $76. Another one that I like for a short is UPS here. Now I'm already short FedEx through a bear put spread. But I also happen to like the setup here. We have this monster move up following their earnings. This is a 20% move, and they had good earnings, and they're moving up higher on sympathy with FedEx, who had monster numbers. And you can look at the FedEx chart; it'll be very similar to this. Same exact chart as UPS, right? They're trading in sympathy with one another. So this is another short idea. I'm already short FedEx, so this might be a day trade opportunity. Not sure if I want to hold two stocks in the same sector with the exact same chart pattern short. That's not good diversification, but we'll see what happens. This thing is testing resistance here at the 105.50 area. Maybe it gets to 106 or so. I have an alert on my charts to tell me if it does get up near 106. I'd prefer to short this at the 106 area. We can see that it doesn't really spend a lot of time at the 106 area, but it is pretty extended here. This one has an RSI of 75, so it's definitely in overbought conditions, much like FedEx here, which is also due for a pullback. It's trading with an RSI of 81. So extreme extension to the upside or to the downside. The farther, the harder, the faster the rubber band gets stretched out, the harder the snap back to reality, the reversion to that mean will be here. Again, short-term play here. Not sure I'll take this trade, but this is a good setup. I wanted to pass this on to anybody else who didn't get in the FedEx trade already. Looking for a potential move back down to the first. Let's see, that's going to be my ad spot here. I'm going to go right about here. Okay, so we're looking for an ultimately probably move to somewhere between 103 and 102.50. That's why I want to get it at 106. We'll get short on this trade under today's low. You can see here we have not had a under candle day for quite a while. So this is very extended to the upside. We're looking for reversal of this trend instead of making new highs. We want to see the first day where we make a new low. So that'll be a trend reversal, a short-term trend reversal indicator for us. And that'll be our entry spot, which is right under 104.43. So probably 104.50 area. I'll start looking to take on a short position here. Definitely an add spot under 104. We know that's going to be an area of support here. Is 104.16. Well, that's probably not it. Let's screw it down. From this day back here, 104.07 is probably technically where I should have had this line. So we'll look to add. If you get short on this 105.40, 104. What did I say? 104.40. Then you add under 104. You have a nice average in the 104.20s. And we'll look to take this down to 102.90, 102.50, and maybe if we're fortunate, we get a nice pullback in the market again, we can get down to this support area at the 102 mark, just under 101.90, 102. So we'll get 3 or 4 points out of this one. Again, another liquid name, 2.8 million shares today, and ATR of about 1.43. So not going to happen in one day. This is probably a 2-day trade. Maximum 3 days would be my guess, but we'll see what the market gives us, and we'll act accordingly. Again, though, I just want to point out that I am in FedEx already, so I probably won't look to take this trade beyond just a day trade, getting that initial move down. This will be this is the one we're looking at right here, looking for a move, return back toward the 155 area. We got short on this. We're short on this at 160 with our spread. So we're out of the money right now with our puts. We're looking for a fail. Now check this out right here. We tested this resistance today. This is great, right? We test this big old peak right here, this reversal. This is a reversal indicator, this candle. This is doji. This was at 164.94, so basically 165. What do we have here? We have this test at 165 and it failed, and then this thing sold off down to 120. So we tested that same exact area today. We were just short of it by 11 cents. Again, combine that with all the other factors telling us that this thing is overbought. It did have good earnings, and it will move irrationally for a while, but it will come back down to reality. So we have the April expiration. We're set for a few weeks here. We don't really have to deal with theta or time decay because we did use a spread. So the short puts will neutralize our negative theta, and we'll have a good opportunity here to make good money on this. It is testing again that 105 resistance area. You can see that long term, it hasn't been at this area in quite a while, and the last time it was, this thing dropped. What did it drop here? Dropped about 28%. So it'd be great if we got a 28% drop. All I really need is about 5-7 points. And again, if we time this with the market pullback, these stocks that are super extended to the upside here, that are trading with ridiculous RSIs, with all these overbought conditions, any little pullback is going to be an excuse for shorts and other sellers to come in and bring it back down to reality. So yeah, you can see the RSI right here. So we will keep this one on, keep this one open, and again, we will compare that to UPS here, a little cheaper, just a very similar setup. Great for a day trade. Don't know that I'll swing it. Tomorrow we have a couple of earnings that I have interest in following. The first one will be Nike. This is always a fun name to see what they do. I mean, look at this chart long term. I would love to have been an investor in Nike before they went up 100%, but I was not a long-term investor in them. But that is a awesome chart just in the last couple of years here. Definitely looking for an iron condor here, as this thing has been trading. Higher off the moving averages, but we're looking for earning. I'm trying to remember what the implied move is. I think it was about 5 points or so. It was under 5 points. So looking for, probably we'll see where we're at middle of the day. But we know that the implied volatility ranking is high on Nike. It's high on any stock going into earnings, higher than average. So we're looking for that volatility crush following earnings. The exception of these big beats and these massive moves. Most of the time we will see these options, the premium and the options get crushed after the earnings event because it is usually lackluster or already priced in, baked in, so to speak. So we're looking for that. Nike is obviously a very big name. There'll be a lot of eyes on it, a lot of speculation from analysts and whatnot. So I have my order open for my Nike Iron Condor, and the other one I wanted to show you was Red Hat. This has a huge implied move of about 10 points baked into it here. So while Nike has a little bigger float and a little bit cheaper, the move is much smaller, almost 50% of the move that Red Hat is expected to make from their earnings event. So we're looking at Iron Condor with a bigger width on this, and we'll definitely alert that if we get filled. I have orders open right now. I'm looking for a credit of 50 cents on Nike, and if I can get it at like $1 out of Red Hat, but I don't know that we'll get it, so I'll adjust the orders as the day goes on, and I'll fire off the alert to our members when we get filled on that. So Nike and Red Hat are the two that I'm most interested in seeing tomorrow. They also have some of the most liquid options, and that's why I chose them compared to the other earners. Now I have a couple questions. MCNZ asks, how far would I go out for options trades? It depends on the type of trade. If it's just a regular swing trade and I am looking for a move over the next few days or whatever, I'll probably go to the next month's strike. So like right now, if it was today, I would look out to April's monthly strike. And almost always, not all the time, but almost always, unless I'm day trading options, I will almost always use a spread. Not because primarily because I want to protect my downside a little bit. I'm willing to cap my gains in order to neutralize some of the theta and some of the vega risk associated with long calls and long puts. So I don't mind. I don't mind spreads. I don't mind potentially leaving money on the table. I get asked at least once a day. Somebody will message me in the chat room and ask me, why do you always do a spread? You're capping your gains. You're capping your gains. What if the stock? If you bought a call, potentially the stock would go to infinity, and you could profit infinitely, and so on and so forth. And it's like, well, I've been trading for about 10, 11 years now, and I don't think I've seen a stock go to infinity one time ever. So I'm happy taking my 30 to 50% wins consistently. And paying bills with that, and and living my life and not swinging for the fences. So remember, guys, base hits win ball games. Home runs do occasionally too, but nobody goes trying for them, at least not successfully, very often if you've ever played baseball. So if it's a earnings trade, generally I'll look to do the weekly if they have weekly expiration, or the current month's expiration. Because I'm usually doing some sort of volatility-related play. I'm usually selling the volatility, and I want the shorter strikes that are going to expire sooner, because those will probably have the fastest reaction to earnings events. So other than that, I have my thermometer here, guys. I don't know if y'all can see that. That's my little thermometer for my barbecue, my smoker, and it's telling me that my meat is almost done. So I have to go and put my asparagus on and finish sending out the email to our members. If you guys have any questions and you're watching this on the recap, feel free to email me, jeff@warriortrading.com. Always happy to answer your questions, and I will catch up with everybody tomorrow. Hope you guys all had a good weekend, good start to the week, and we'll be back tomorrow night. Talk to you then.